Hello guys, glad to have you on board again. Today as usual, I'm sorry about that. We're gonna squeeze and skip the cryptocurrencies because once again, really, absolutely nothing to talk about. We're even having lower volatility than we had after the previous expansion day, in which the volatility started to rebound. It's basically dead right away, right here, squeezing momentum as usual. So in terms of candle closes, even the recent outburst of volatility suggests that it's just nothing more than just a dead market, which is a good sign. Once again, volume dropping down as very, very low level. We're even lower than what we were before. So the lowest ever volumes in terms of trading cryptocurrencies. Prices are not moving, which is good sign. We're still trading which still changing hands from short-term traders seeking volatility to long-term buy and holders. We're seeking value, and this is great. So instead of speculation, we're now searching for value, which is, as once again, what I was looking forward for. So desert crossing phase is what we're facing, and it seems like it is still ongoing, and we just have to wait. So please, I know some of you guys are lacking of that patience, but it's an absolutely necessary condition to make buy and holds, decent buy and holds. Not just to buy and holds for stupid traders who want to make Lambo trading and things like that, but the real traders, those who actually make money, those who don't sell you coaches to become the best trader fucking ever, and all those stupid stuff. Okay, real traders have patience, and that's what makes the difference out there between rational and risk-managed decisions and stupid emotional decisions that you might have had when you started trading, like everybody had. So it's just, don't blame yourself. Obviously, I've been there before, so I'm talking about something I've lived also. So this is why I can talk about this so freely, because I've been through this already. Yes, and I try to teach you how to get yourself ahead of this as fast as possible, just getting away from the common and standard mistakes that you have to make, but just get through. So that aside, sorry about that very short introduction, but that's all I have to say regarding this. Really, wait is the only option there. So we're going to switch to conventional markets right away, and there's some things to talk about. Yesterday was kind of a mess. Unexpected trading. Those kind of days, I rarely see those. Even in my 8 years experience, I rarely see that kind of thing happening in the stock market. Because not necessarily what happened yesterday, but what happened the latest 2 days, which is absolutely abnormal. So I'm going to show this in terms of SPX and moreover in NASDAQ. I think NASDAQ is even worse. This is absolutely nonsense, because yesterday, the day after yesterday, we made some support holding kind of scenario. On the technical area, we make a strong rebound, which means after gapping down 1.5%, which is really a lot. Gapping 1.5% on the cash index is enormous. And moreover, we were not gapping 1.5%, we were gapping down 2%. Generally, the market never recovers from a 2% gap. It's too much in terms of gapping valuation, so generally, investors have to trigger stop losses and risk management scenarios to reduce their exposition. So the market is gapping down, and the market has to reduce the leverages, so it's selling instantly. That's what we had. Opening, selling, and for some reasons, the market bought it out. So unexpected thing yesterday, thanks to Apple, sorry, not yesterday, but the day before, absolutely nonsense kind of a day. Apple gapping down as well, and for some stupid reasons, buying it out instantly. Algorithmic trading, all day bullish, really stupid trading, and everybody thought that this was a buying signal, me included. And the problem is, facing that buying signal, what I done is basically the only thing I had to do. I reduced all my leverage. I cut down and took the profits on all my reinforcement positions on NASDAQ, SPX, I took away my trade on Nvidia, Amazon. I took a loss on Apple. And facing this, I just said, okay, the market is wrong footing me, so I'm taking the money off the table. Not entirely. I still had some position open in bearish positions in the US stock indexes. Those I still have currently. But the problem is, I had to reduce the leverage because the signal was clear. The market didn't want to go lower. That's what it said 2 days ago. And then yesterday comes up. The market flushed it out in a single trading day, minus 5% day, approximately, closing at the lows. I mean, fuck it. What we've done yesterday is what we were supposed to do in 2 days. What is that? That is just nonsense. We should just have closed in here the day after, the day before, and closed in here yesterday. And this would have been just normal kind of pricing, exactly what I would have expected. So what the fuck did happen back then? It's absolutely abnormal. It's algorithmic trading, and this is not supposed to happen when the market is trending. This kind of thing is what we call market making pullbacks. I mean algorithmic rebuying because the market has some strong demand and the market just rebounces to get to that demand. This is what we see in range actions. Nothing close to trend trading, which means what we had yesterday should not have happened because this only happens when the market is trending. So now we're trending bearish, which is good. Once again, I was expecting this to fuck up the bulls, to install some signs of bearish trends to forthcome. But the problem is, this should never have happened. So I made a mistake myself because I teach you guys to take rational decision and try to make emotions aside by having a strategy that helps you to avoid negative emotion impact. And the thing is that I just respected the strategy here, but the market just did that in... I don't like to say that, but basically it's kind of done in purpose to fuck up the bears. This is clearly a bullish signal that all the bears had to reduce leverage facing this. So why did this happen? It's just been done to fuck me up. And I hate that. It's been working for that for 6 months, searching for that market top, painfully taking day after day, that market refusing to go lower. And now the market just fucks me up in a single day. And obviously yesterday was a great day in terms of gains in the equity. The problem is, it should have been far more than that, because why hasn't been lowered? Simply because I got fucked up by Apple for a day before. I got out of Amazon, who's now pricing minus fucking 6%, and I also took my fucking profit on Nvidia before it makes a minus 10%, and it's gonna gap even lower today. So that's the worst ever possible scenario, because those gains were mine. I should have taken those gains, and the market just took them away from me because of that fucking pullback 2 days ago. That unexpected pullback. So I don't get it. I don't know why the market did that, but simply I made a mistake in here. The plan was this, to reach out to that fucking target, but because of 2 days ago's rebouncing, unexpected rebouncing, I decided to get out. And I changed the plan, which I shouldn't have done. And now, this is what happens. I got at it here, and now I'm missing probably an additional 15% down move on Nvidia. I'm out of Amazon, and I cannot take a bearish entry right now, which is, once again, big problem to me, because I was expecting that fucking move to occur, and I'll just miss it because I made a stupid choice. It happens, but did I make anything wrong in here? The answer is also no. So I blame myself for getting into that stupid trap at the worst possible timing. I mean, in terms of market manipulation, and I don't like that word, but it is kind of this in here. 2 days ago, it's kind of a market got manipulated just to fuck up the bears. It was a wide open trade for bears to be wrong-footed. So facing this, I had to react the way I did. I may have a little bit overreacted, meaning that I shouldn't have exited Nvidia and Amazon. And I basically done those two simply because Apple fucked me up. And as I took a loss on Apple, I said, okay, you know what? Fuck it. I'm going to take the nice gains I have on Nvidia and Amazon instead. First, to pay for that tiny loss, but secondly, because I don't want to see those nice gains I have on Nvidia and Amazon getting out, simply because they will do the same fucking stuff by unwinding the bearish signals. So problems in here, now the bears are in control, I cannot go in again, so I have to watch something I've been working for 6 months, and I just have to watch this falling apart just in front of me, and not taking the money. So that's the worst case scenario, because everybody has some psychological problems. I mean, some context will force me to have negative emotions, and this is clearly the kind of context that push me out of nerves. And yes, you probably can hear that in the tone of my voice today. I'm pissed off. Really, I am. The problem is, I teach you guys to pay attention to your emotions, and so do I. So I'm pissed off. I know about that. Unfortunately, I'm in the kind of context I cannot handle that piss of emotion, which means not being able to work this out. The only rational decision I take is just to do nothing. So I'm not trading anymore for just a few days, I think. Even if it's the timing the market will collapse, then so be it. The problem is trading right now will be probably the worst case scenario to me. The only trade I took is to take another tiny short reinforcement on Apple. I'm still bearish on this one, but there's nothing else I can do. And I'm not doing anything else. I'm not reinforcing the NASDAQ, reinforcing the SPX, reinforcing anything. I'm not buying, I'm not selling, I'm just doing nothing today. I'm going to do intraday trading for a few days just to get myself back on the foot and flush out those negative emotions. Simply because, as I said, I understand the rationality of that emotion. The problem is I can't handle this. And I don't want to, I'm being unable to fight it. I'm not going to trade simply because I don't want to take stupid decision emotionally driven. So I'm simply following the advices I give you. I'm not one of those guys who just throw away stupid sentences and not following its own advices. I do follow them. I know I'm under emotional pressure right now, and I'm not going to trade because of this. Or I'm going to reduce my trading decisions to the minimum. I'm going to take tiny trade sizes. So if I do stupid decisions because of emotionally driven decision making, then I'll take really tiny losses. And I don't want to risk it all. First of all, we've got lots of volatility to expect, so there's not necessarily the need to put big position in sizing. But anyway, okay, that being said, I'm going to switch back to intraday trading for a few days until I get myself ready again to be compatible with a rational, emotionally aside trading, which is for now not really the case, okay? So I don't want to beat the market because it fucked me, which is exactly what I would do if I was trading right now. So I'm not trying to fight this. The market fucked me. Great job, and basically it's clap. Yes, you fucked me after 6 months of waiting, and I've done a perfect job for 6 months. Find the market top, reinforced perfectly a few days ago, and now I'm out. Oh, not out. I'm making profits, but really tiny profits regarding the risk I've been taking, which means something is wrong in my job, but I can't stress it anymore, and I can't change that anymore because we're too low at those current prices. Even the breakout trades are not possible. So I just let it go with the tiny position sizes I still have opened on that market, the NASDAQ and the SPX, but that's all I can do, and that's all I will do. So set aside, we're going to move on to General Electric as well. I want to talk about this one. So General Electric has been pulled backing 4% yesterday, and I think that's really an interesting price to pay, or eventually going slightly lower, testing that previous low in here once again for a double dip in here, and probably, so watch out for that area. But I think any pullback in here, it could be an interesting buying entry. If the market wants to rebound in the next few days, I think it obviously going to get into value stocks, and generally General Electric is going to be, I think, the number one top-notch buying opportunity that most of investors will try to seek for. So I'm obviously in this one for that reason, and I remain bullish on General Electric until further notice. I'm not reinforcing either, I'm just staying in here, but just talking about that for those who, some of you guys were asking me about General Electrics and things like that. So yes, definitely that's the kind of pullback you want to get, but wait for a few days, and earnings are coming away, and I think, and I hope the market will pay for those, hopefully. Okay, so it still needs to remain not, if you're buying this, it has to be buy and hold, so don't put too much money, no stop losses, and if the earnings are for some reasons disappointing, and if we make new historical lows, if not historical, but if we went to go making new lows, you don't want to take stop losses in here, okay? Sorry. So moving on, forex markets, and then we're going to have to switch to gold and 10-year yields. So obviously, no, we're going to start 10-year yields. So obviously, market is stressed, overstressed. So the market is pulling back on yields. But I think right here is the exact price action I would have liked to see. So we're oversold into a bullish trend channels bottom. So I think the market is going to rebuy at some point in here. So maybe a pullback to expect on the Eurozone equities. But the thing is that anyway, I think at some point, even if we still have some stress in the equities, we should have rising yields no matter what, because we're into very dangerous levels. The gap between Italy and Germany hasn't been that high forever, and the problem is those tensions still remains very active, and the problem is we're into very dangerous areas in terms of bonds, in terms of liquidity of that market, which means probably at that point the ECB is the only fucking buyer of bonds, which is a problem. It's not supposed to be that way. A central bank's job is not to buy the entire bond market for a single country, which is big problem, because the ECB is buying more bonds than any other country's bonds, and that's a big problem. It's causing problems of liquidity in that market, and the problem is that the QE will have to wind down, and when it will leave that market to very few liquidity, as we'll probably have no buyers anymore. So when the ECB will pull out of bond buying, who the hell's going to buy them? That's the real question out there. So we could have a bond crashing market, which is the worst case scenario, because once again, ECB is set to make market stabilization, to set to maintain price stability. And if we have a bond market crash, meaning high overvaluation of bonds, it will be worst case scenario. Rising yield fastly in the Eurozone, we'll expect inflation afterwards, and worst case, it means that inflation will rise rates as well. And it's kind of a parabolic move, one pushing the other, and we'll have fast inflation and fast rising yields. It causes heavy and strong recessions. So it would be... It's not normal what we're doing right now, because the market is taking heavy amount of risk by not pricing in against the ECB. We should have speculators fighting the ECB just to cooling the wind down of the ECB when it's going to exit its bond repurchases. All right, so that was for it. Gold still working out that resistance. Not bullish, not bearish, pretty hard to say. We still haven't broke it up, so it's hard to say. At that point, as long as we don't have a candle close above those levels, I'm not buying again. I've took away all the reinforcements. I'm basically still bullish in here, but still lacking of confidence in here, even though I think that market is bullish and will keep on going higher. It's just that for now, it's hard to forecast what the timing will be. You could have some pullbacks and things like that, and I don't really want to be among those who will be fucked up by that market. Because the problem, once again, in here is just one single problem, the fucking dollar. We're going to talk right away about that. Instead of talking about the forex market, we're going to talk about this. Huge problems ahead. I mean, if the dollar is that bullish, oh gosh, we'll have a damn fucking problem, because it's not normal, and we should have a bearish dollar. Lots of people are expecting the dollar to be bearish, and it's just doing the opposite, because as usual, as long as you think right now in the market will just do the opposite, because the market doesn't know what to do, very low liquidity. So what it does is basically whoever wants to trade, we're going to wrong foot it. We're going to wrong foot him, and that's a big problem. We should be concerned about that because this is no market anymore. It's just, I feel like the market recently is just about market making and not about making market decisions. So instead of taking a stand for rational decision, the market's just, okay, you know what, fuck it, just let it go. We're going to let the market decide for itself. But the problem is market has been becoming more and more automatized. No, that word doesn't really exist, but robots are taking it over. So the problem is if we let the robot trades alone, we have to make some boundaries out there because robots are not making rational decisions. They are making decisions in terms of liquidity. So if liquidity is provided by the robots, and if the robots are there to manage that liquidity as well, then who the fuck is taking the decision? Who the fuck is making the decision out there? The market isn't supposed to be decided by robots entirely. So the problem is right now the robots are just trading against human. It's like humans are taking a decision, taking a stand, speculating. The robots are going against them as long as they can. Look at the previous gold trend, highly stupid. And what we're having right now is the exact same thing. Humans think the dollars are bearish, so guess what? Robots are buying it. It really is like that. That's the feeling I have. It's irrational. It's absolutely stupid. And the problem is at some point we're going to put an end to it because there is a big problem ahead. If the market is behaving abnormally a long time, because it's been happening for so long right now, it's basically the entire 2018 year is just wrong-footing everything that is a rational decision. You take it, it's rational, guess what? We're going to do the opposite first. So it doesn't mean I'm wrong. I think the dollar in a few years from now will be lower, but the problem is what will we do in between? How far can the algorithm fuck us up before going into the right decision? So that's a problem of liquidity management, and I think we should seriously have and raising some questions about that, about the problem that the liquidity is really, really low and far lower than what we were expecting. What we see basically in terms of trading today, in terms of traded volumes, is just algorithm sending the ball from one side to another. It's just playing ping pong. They're buying and selling multiple times a day, so billions of times a day, but they're just basically buying and selling the same stuff all over again, day by day, minute after minute, second after second, and basically that creates a false idea of liquidity. The market isn't liquid at all, and in that low liquid context, we're still letting those algos making the decision, and that's probably a danger coming ahead. So bear that in mind, that right now might not be the easiest way, the easiest context to trade as a speculator. I know about that. That's why the latest 6 months have been a little bit rough. But I think that's a context that's going to end at some point, because I think at some point we're going to take back the decisions making and just going to say, okay, enough with the algorithms, just turn them down for a bit, and then we're going to have some very nasty volatility. So we'll see about that. But I think multiple dangers you're already aware of. So just don't be aggressively bearish either. It's not the choice here. The only choice here is to be aware that the risk has never ever been bigger than how it is right now. So facing that risk, it's not the time to put your money out there, taking some leverage decisions and things like that. Only leverage when you got validation. And even though recently lots of leverage scenario has been dangerously questioned, take the EURJPY for example. Why the fuck did we have that kind of pullback to just go straight away to the targets? So why did we have this? Just to make the speculators fuck away. That's what it is. It wasn't necessary, but it happened. So I think the market right now is just trading liquidity. It means speculators are the only one who take the decision, and the market will just do the opposite side. So you're trading against robots that have information you don't have. So it's dangerous to trade in that context. The thing is that you need to manage the risk even more than you would have done before. So anyway, that being said, I remain on my scenarios, and the thing is that Sorry, we have to switch this one. 4 and 5. Yes. So reinforcements I've been taking on the yen the other day. So yes. Sorry, and I took them off. So I reinforced the yen the other day, perfectly reinforced right in here, and I took it off the day right after because of that lower shadow candle. So I took the reinforcements on the yen off the market. So I should be 4 on 5, but unfortunately in terms of account management, I'm still into 3 on 5 kind of leverage in here. So once again, bad decision in here, but just because of that fucking stupid lower shadow candle that's been showing up as well on the yen pairs. So that being said, we're going to stop in here, guys. I think I said it all. So we can expect some more bearishness in Wall Street because lots of valuations like Amazon have still a lot of downside possibilities. Apple has a lot of it. And regarding its weighting into the indices, it could very well be another shock if this one decides to trigger today or tomorrow. So we'll see about that. It's still, once again, pending about fucking Apple. It's just one fucking stock that's holding the entire US market. And as this one falls, this will be terminated. So the question is, will it fall or not? The market is kind of supporting this for reasons I really don't get. I mean, Apple's just a fucking phone seller, and even Xiaomi is crossing Apple. So Apple's about to become the 4th phone seller in the world. So instead of making huge margins on selling very few products, this is the basics model of Apple. So yes, they have some strong platforms. But, I mean, Xiaomi does have the same kind of stuff. It does it better. It does it cheaper. So why the fuck do we still talk about Apple? Yes, obviously, a few years from now, Apple will probably be cheaper and Xiaomi will be a lot more expensive in terms of stock pricing. So why the fuck the market is selling a Xiaomi and buying Apple? I just don't get it. It's nonsense. Why? Because it's a fucking bubble, and the more you think, the more you're proving wrong. So Apple is stupid pricing, that's normal, but every bubble bursts at some point, and I just want to be there to fuck up those who've been making that stupid decision of buying something that is going to lose market shares instead of buying something that will gain those market shares, which is basically making a rational choice in here is to buy Xiaomi and sell Apple instead of doing the opposite. Okay, so for now the market is doing the opposite because the market is acting irrational, but it's not going to last forever. All right, questions, and then we'll move away. So, great video, any person with common sense. No, it's a terrible time to buy Apple. Yes, however, you hold on much lower prices. Obviously, it's a long-term hold. I think a long-term hold has to be taken down in here. We're bubble trading, and in any bubbles, you don't want to remain buyer until the end. You don't want to wait for the bear trend to show up. You want to sell at high prices. You can spare 10% of the initial amount if you want to play the bubble forever, but I won't play that. It's just basically $220 is more than enough for Apple. If you are buying this a long run, get the fuck away. It's just like, look at General Electric back then. If you played the bubble, if you didn't take the gains at the top, you just basically lost the value bite by bite when the market retraced to very low valuation. So why would you wait for the market to be bearish to get the fuck out of here? Wait, okay, but take the fucking gain. So it doesn't mean you have to go entirely out, but even if you are a long-term holder of Apple, it is time to get the fuck out of here. It is, obviously, just like I've said back then, in Bitcoins, those who made the right decisions are the ones who sold when the price rose above 17K. It's that was the timing to get the fuck out. And now everybody thinks that that this will be good, and Apple is pretty fucking overpriced, and it can go down many ways. It can do brutal, it can do normal kind of crashing, but it just needs a negative outflow. Just wait for this. If nasty things start to come for Apple, and people start to question the valuation, because it will come at some point. The people will start to question, why did we go that high? Apple, does it really worth $1,000 billion? Does it really worth that? Actually, the answer is no. Everybody knows that. The thing is that we're not asking the question for now. We're just asking how high can this thing go, which is not a question. Once again, when it comes to market, this is not the question you ask. You are supposed to ask how much worth this company, not how high can the price go. This is a sign of a bubble. You need to have additional information, meaning retail traders catching interest on this. We obviously have that. And the problem is we have all the components of a big fucking bubble, and every bubble tends to burst when they complete a cycle. And we might be about to complete that cycle, so you don't want to remain buyer facing this. You just want to get the fuck out and eventually put the money back in if we break the resistance. That's a choice. That's a rational choice. If you still want to ride the trend, ride the bubble, get the fuck out right now because the timing is dangerous more than ever. And if it rises again, rises for ashes, that's possible. If it does that, then you get in again and you ride the other and future trend pushing us to higher valuations. Okay? Okay, and tutorial specific how to trade your favorite commodities. So the goal, I basically don't use ETF. I use futures markets, and I do have physical gold as well. That's the way I do it. But once again, don't put all your money into a single asset class. That's the basic standard investment. If you want to make rational investment, don't put it all in the same place. So having some gold is necessary today. I think having it some physical way is necessary for every person having more than $200,000 euros or dollars, because basically having, let's say, 20% in physical gold is 15% seems more appropriate. I'll say 15% in physical gold, 15% in cryptocurrency assets to store value in case of big problems. But that just means 30% of your capital maximum level should be assigned to very risky very safe havens like cryptocurrencies and gold that will be a safe haven in case of big market crashes and problems in the financial system. So you need to face that eventual problem. But the thing is that's an eventuality. It's not something you want to put all your assets into. It's just a security. Okay, you use that as a security. So no more than 30% into the most secure assets. The rest has to remain just like it is currently. I do have real estate because I have to have a roof and I don't want to pay rent for this. So real estate, few gold, few cryptocurrency assets, still having year by year 50K of speculative assets, and the rest is just going to be liquid and cash. It's just going to be available cash flow. Ready to invest here and there or whatever. I'm just going to wait for the next cycle to come and put my money in there. Maybe making some investment into some value stock like General Electric, Xiaomi, those things might be ready to give a signal. Basically, I just said it for the French user and I'm going to do it. I'm going to talk about Xiaomi. Okay, so Xiaomi, Hong Kong exchange, giving some strong signal, oversold. We don't have enough history to put cycles. But just to be straightforward in here, this is what we have. This is a range, okay? You take the opening price, okay? You build a range to the highest daily close we managed to make. Give me a second. Fuck it. All right. So here's the selling area. Okay, the area was got sold at the opening pricing, the IPO. Okay, and if you report that range, we're at the downside of that range. Really interesting prices. We're oversold. Doesn't mean we have to buy right now. Once again, it means buying a low. But it says that right now we should search for buying entries. So I would say wait for a few pullbacks in the next few days. But obviously, this is something you want to buy at some point. So Xiaomi, definitely something I would like to buy. But I'm basically just waiting for those trends to terminate. So we've got a bearish gap signaling that bears are still pressuring that market, but I think first of all is to find some support in here and try to support the prices and fill that gap with the first target. Okay, showing that okay, bearish trends terminated for Xiaomi. It's about time to go growth, and we'll basically find the long-term investment in here. It's a range, okay, so we're going to oscillate in that range. First target is to secure the trade at the mid part of the range and let go. Basically, that will be my trading strategy. Finding some bullish entry in here. Speculative entry, buy and hold. Okay, so trying to find some speculative trades and build a buy and hold scenario with an entry price approximately there. I'd like to have something like that. Obviously, the lower the better, but this is the average entry price I'd like to have. So it will be an entry buying signal near those prices. Stop loss will be no stop loss, it's a buy and hold, okay? But basically what I would like to do is to pay for a stop loss in here in the afterwards. So what I would like to see in terms of pricing is working that fucking area. I don't know why. We can make lower shadow candles. I don't give a shit. Okay, all I want is to validate the buy and hold by freaking closing that gap, pullbacking, loading on assets. Okay, whenever we feel the gap, any pullback, I'll be loading myself into speculative entries on Xiaomi. Okay, and those speculative entries will play for this. And whenever we go there, I take all the cash out of speculative entries and put a stop loss on Xiaomi. Okay, and then the buy and holds, I'll take them and still hold them for probably 2, 3, 4 years. It's going to be a growth stock in here. I think that's that's the speculative bet I'm making in here. If Xiaomi becomes a growth stock, it's going to be huge. And I think this one has a strong potential to making 10 to 20 times the valuation in terms of growth during the next economic cycle. Okay? So, we're done with that. Thank you of Kron and Tilray. Okay, so weed stocks. Could be interesting, actually. That's a sector I like too. I'm not a pothead. I've been, obviously, so I know what I'm talking about. Okay. So, all right. That's an interesting price action. Not something I'd like to bet on because it's a little bit too volatile. It reminds me of Tesla, actually. Kinds of a hype sector, very volatile, lots of speculation, danger down the road because I see some rational price action and irrational price action in here. So it seems like lots of pothead themselves might be trading this. No, I'm kidding, but I can see the trend potential, but the problem is it's too volatile. So it sounds more like a bet. Like it's trading Tesla is like a bet. So I think trading this is possible, but it's very violent and driven by news flows and things like that. So you can see market is expecting great earnings and bam, pricing them off, or maybe there was another catalyst back then. Don't know about that. The thing is that it doesn't sound like something I can exploit because whenever it tries to trend, we're building ranges. So I would say, okay, right now you can clearly see attempt to break down in here, attempt to break up in here. So you should definitely see that the market is ranging in here. So you have that thing probably happening. I would say big range. Sorry, not like that. Searching for a moment. Yes, I think something similar to this might be more probable. God damn it. All right, so I would say this and take this. Yes, definitely that's the thing. All right, so you can see breaks happening at the mid part every time. So that's signaling that, yes, this is probably the trend channel we're having. And yes, once again, the algorithm done the great job. It found that channel for you. So this is where we have support prices. So yes, obviously a buying entry could be possible, but you need to wait for a momentum signal at least. Don't wait for sine wave in here. Sine wave is obviously going to be lost in such volatile assets. So sine wave will be useless in here, absolutely useless, because that market is too volatile to be cyclical. So sine wave is obviously going to take this for noise. So don't use sine wave in here. This is why, using my strategy, I would say that's not the best investment because you're not taking advantage of the indicators. The advantage comes from combining cycles and momentum to reduce the risk. In here, you can't use sine wave, which means you can only do momentum kind of trading. Still okay with that if that's your thing. But the problem is we've got so many assets to trade in the trading world. So why the fuck would you get yourself into trading a dangerous stuff in which you don't have the full advantage of using your indicators? So I would personally get out of this for that reason, because some other markets are showing far better risk management. So if you absolutely want to get there, okay, but do be aware that this is only going to be a momentum trade and nothing close to cyclical trading. All right, that was the latest question. So thank you guys for your question once again. See you later. Be really cautious with the current market. Even professionals like me are getting wrong-footed recently, and that's a problem. It means nah, we're dangerous time trading, and even if us are struggling in here, you beginners will probably suffer some huge reversals and facing this higher risk, so lower exposition. Remember that whenever you want to take a trade, the lightest rational decision you could make is just to divide by 2 the leverage you would normally use. That's the thing you should do. Professionals are doing this, so should you. Okay? So we know it's dangerous. We know we're facing lots of problems, wrong footing patterns, things like that. Facing this higher volatility, we need to reduce the leverage. We all know that because as professionals, we're used to this, to adjust the leverage regarding to the context. The thing is that you should do as well. That's the lesson you should learn right now. Facing uncertainty and danger, you should put yourself in safer areas and reduce the leverage instead of taking more risk. The stupid guys out there who are telling you they're making huge amounts of profits day by day because they take advantage of the volatility, can be sure that those guys will take a hit at some point, and they will take it hard because they're using not necessarily leverage, but they're overpricing the position sizing, which is the biggest problem. So once again, don't look at the glitters. The actual trading job is nothing like glitters. It's just a repetitive job, boring, and Lambo and stupid stuff like that. It's just a catchphrase for stupid guys. So if you're stupid enough to take those sentences for true and real, oh gosh, I wish you stopped trading as fast as possible, because obviously going to take your money at some point if you still believe those catching phrases. So bye guys, trade safe, see you tomorrow. Today's big day, we've got ECB, everything like that. It's going to be volatile. Yesterday already was, so really stay the fuck away from here as long as you can. It's going to be dangerous. Just stay with the way you currently are. Widen the stop losses if necessary, and brace yourselves.